Alright, I was on page 6D-5 of the Real Estate Appraisal Regulations and Appraisal Evaluation Guidelines. Under Title 11 of the Appraisal Regulations, states have established two different classifications of appraisers in their licensing systems, licensed and certified. A licensed appraiser is the lesser certification. Appraisers with this class of license meet the state minimum requirements to enable them to perform appraisals for financial institutions when required by the regulations. A certified appraiser is a higher classification of license that enables the holder to perform appraisals of larger or more complex types of real estate. State qualifications for a certified appraiser must meet the minimum criteria established by the Appraiser Qualifications Board as part of the Appraisal Foundation. When a real estate appraiser is required under the regulations, it must be conducted by either a state licensed or state certified appraiser. With a state certified appraiser required in some of the transactions. See below. When a state certified appraiser must be used. The regulations provide that because of the size and complexity of certain transactions, only state-certified appraisers can perform an appraisal. A state-certified appraiser must be used for these types of transactions. All transactions having a transaction value of $1 million or more. All transactions involving real estate other than 1 to 4 family residential real estate having a transaction value of $250,000 or more. All complex 1 to 4 family residential real estate transactions of $25,000 or more. A complex real estate is one in which a property being appraised, the form of ownership, or the market conditions are atypical. For example, the following may be atypical factors for a 1 to 4 family dwelling. Size, the dwelling may be unusually large. Age, the dwelling may be very old. Style, the style of the dwelling may be unusual. Lot, the lot of the dwelling may be unusual. Neighborhood, a very expensive home may be located in a neighborhood composed of moderately priced homes. Environment, there may be environmental liability issues. Comparables, there may be limited comparables. And then I have property ownership and market conditions as well, which I dragged down from somewhere. The lender makes the determinations of complexity, and if during the course of an appraisal a licensed appraiser identifies factors that will result in the transaction being considered atypical, then the lender can ask the appraiser to complete the appraisal and have a certified appraiser co-sign the report or engage a certified appraiser to complete the appraisal. In determining value, remember that for real estate transaction value is determined by the value of the loan, but for sales, leases, purchases, and investments in or exchanges of real estate is determined by the market value of the real estate involved. AQB appraiser classifications. The Appraiser Qualification Board, with the approval of the Appraiser Subcommittee, has actually established 3 classes of real estate appraisers rather than just 2, as provided in the appraisal regulations. These are a licensed real property appraiser, a certified residential real property appraiser, and a certified general real property appraiser. Certified residential designation. The certified residential designation is an intermediate classification that allows appraiser to appraise complex 1 to 4 family residential transactions of $250,000 or more and any residential transaction of $1 million or more, but not commercial or other types of real estate. The AQB's purpose in creating this intermediate classification was to meet the needs of states that have a substantial amount of high-value 1 to 4 family residential real estate that would otherwise require the use of a state-certified appraiser. In creating this limited class of certified appraiser, the AQB thought more certified appraisers would be available to appraise this high-value real estate, since the experience and education requirements are still less than those required for certified appraisers who can appraise non-residential real estate. Licensed designation. Title 11 of FERA gave the AQB the authority to establish the criteria only for the certified class of appraiser. Nonetheless, the AQB felt compelled to develop criteria for licensed appraisers as well. In doing so, the AQB limited the scope of the real estate that licensed appraisers could appraise to 1 to 4 family residential property, having it up to individual states to broaden the scope beyond that. If a state does not broaden the scope of licensed appraiser beyond 1 to 4 family residential real estate, a conflict is created with the appraisal regulations, which allow a licensed appraiser to perform appraisals on commercial property and on 5 or more family residential property with the transaction value up to $250,000. For example, the appraisal regulations allow a bank to hire a licensed appraiser to appraise commercial real estate in transaction with a proposed $200,000 loan. However, the state licensing laws do not permit a licensed appraiser to perform the appraisal because the license is limited to 1 to 4 family real estate. In such cases, state law must be followed and a certified general real property appraisal will have to be engaged. Appraiser independence and competence. The appraisal regulations require appraisers to be both competent and independent. The standards for those requirements differ depending on whether the appraiser is a bank employee, staff appraiser, or an outside appraiser that the bank engages, fee appraiser. In addition to these regulations, real estate appraisers are required to follow the Uniform Standards of Professional Appraisal Practice, USPAP. These standards are established by a private organization of real estate appraisers, but their development is also overseen by the financial institutions' regulatory agencies. The USPAP contains extensive standards governing the practice of appraising real estate, and the appraisal regulations generally incorporate USPAP by reference and additional provisions which are either more stringent than USPAP or provide additional detail tailored to financial institutions. Outside appraisers, fee appraisers. If an appraiser is prepared by a fee appraiser, that appraiser must be engaged directly by the institution or its agent. This means that the appraiser ordered by the loan applicant cannot qualify under the regulations. For example, if a loan applicant already ordered an appraisal, you may not have the transmittal letter changed to the bank as the addressee. The only way a bank can accept the applicant's appraiser for the applicant to release the appraiser. The only way a bank can accept an applicant's appraisal is for the applicant to release the appraiser as allowed under USPAP, because the appraiser is not allowed to have 2 clients in such situations. Even with such a release, an updated appraisal may be required depending on the time between the date of the appraisal and the date of the release. So, appraiser is not allowed to have 2 clients. So, that's why when one bank ordered an appraisal and you decide to go with a different bank, you have to go through like the whole process of releasing the appraisal, especially if the bank didn't really order it and it was like the GSE or something that kind of has possession of it. That can be a long drawn out process. But nevertheless, in addition, the appraiser must have no direct or indirect interest, financial or otherwise, in the property of the transaction. Rural areas. Financial institutions in smaller, remote, rural areas may have difficulty finding competent appraisers who, because of the competency requirements of the USPAT and the real estate appraisal regulations. In many rural areas, the real estate appraiser may only be found some distance away. For an appraiser to be considered competent under the USPAT, the appraiser must be familiar with the local real estate market, a difficult task for an appraiser located a long distance from the bank. The result may be an additional cost for the appraisal in order for the appraiser to become competent in the local market. Membership in appraisal organization. A lender cannot exclude a state-certified or state-licensed appraiser from consideration solely by virtue of the appraiser's membership or lack of membership in any particular appraisal organization. For example, a bank's appraisal policy cannot include a clause requiring appraisers to have a member of the Appraisal Institute, MAI, designation for them to be considered to perform appraisals for the bank. While an MAI designation can be a factor in evaluating the appraiser's qualifications for particular engagements, the lack of such designation cannot be a factor in evaluating the sole reason for excluding an appraiser from consideration. Written engagement letter. Now into the important stuff. For transactions that require appraisals under the regulations, banks may want to use a written engagement letter to engage outside appraisers. You can use a separate letter for each individual engagement or a single letter when the bank first approves the appraiser for use. The single letter can then cover all appraisals that the appraiser performs subject to the regulations. That's not a terrible idea. Save yourself some effort there. Reference the a written letter provides the bank with documentation that it engaged the appraiser directly and also documents the terms of the engagement. The letter could also include reference to the content requirements an appraiser is required to meet under the regulations, a clause stating that the written appraisal will conform to those requirements, and a requirement for the appraiser to include with the report a statement that the reporter conforms to the requirements of the regulations. This can be a transmittal letter or elsewhere. In-house appraisers, staff appraisers. A staff appraiser must be independent of the bank's lending, investments, and collection functions and can have no involvement in the transaction other than as an appraiser. In addition, the appraiser must have no direct or indirect interest, financial or otherwise, in the property. If the only qualified person available to form an outside or an appraisal is involved in the bank's lending, investment, or collection functions, the bank may take appropriate steps to ensure that the appraiser exercises independent judgment and that the appraisal is adequate. Such steps include, but are not limited to, prohibiting the appraiser from performing appraisals. What the heck? In connection with transactions which he or she is involved, and B, prohibiting directors and officers from participating in any vote for which they performed an appraisal. Prohibiting an appraiser from performing appraisals in connection with transactions. In small banks, such independence by a staff appraiser may be difficult, if not impossible. To meet the independence requirements, the bank must have an employee with extensive real estate expertise who is not involved in the approval of a real estate loan if he or she appraised the real estate. Most small financial institutions cannot afford this luxury. A state-certified or state-licensed appraiser cannot be considered competent solely because the appraiser is licensed or certified. A bank's determination of competence must be based on the appraiser's experience and educational background as they relate to the particular appraisal assignment. Acceptance of an appraisal engaged by another institution. In a number of cases, such as where a real estate purchaser shops for credit from a group of lenders, a real estate appraisal is required. Ordinarily, the rules would require each financial institution considering the loan to perform its own appraisal. However, an institution may accept an appraisal prepared by an appraiser engaged directly by another financial services institution if the following exists. A. The appraiser has no direct or indirect interest, financial or otherwise, in the property or transaction. B. The bank accepting the appraisal determines that the appraisal conforms to the requirements of the appraisal regulation and is otherwise acceptable. The regulations do not define the term financial services institution, but institutions that are not insured by the FDIC, such as mortgage-backed institutions, are included. The rules do not allow a financial institution to accept an appraisal ordered by the purchaser or the loan applicant. The issue of accepting appraisals engaged by another is discussed in more detail under the guidelines in fact.